That's when, as an example, a mortgage would go into foreclosure, and that's where you start getting some serious dings on your credit score. Amounts owed. This looks at the total of all the amounts you owe for all the accounts. So credit cards, installment loans. On a credit card, the amount owed would be looked at like this on the credit bureau. It would say your credit limit is $10,000. Your credit balance is $3,000. You're at a 30% credit utilization. You're using 30% of your available credit. That would be the lowest echelon of what would affect your credit score. So it's 30%, 50%, and 80% are the three areas where you're going to get dinged a little bit. Yes?
I just pulled my credit report, and it showed not only the available amount of money owed on the available on the credit card,
Yep.
but it didn't show what my current balance was. It showed the highest amount owed
Right.
in the last year or whatever it was.
Interesting. That's interesting. I haven't seen that. They may be changing that. Do you know who you pulled it through?
I believe it was TransUnion.
Okay. Some of them, and there was a little bit of speculation that some of the credit bureaus were actually artificially deflating people's scores, and whether it was in conjunction with lenders or what, we don't really know. But what they would do is they would balance chase. So if you had a $10,000 limit card and you were at $8,000, or let's say it was at $9,500 and you paid it down to $8,000, they would immediately shrink your available limit to $8,500. And what that did was it would keep increasing your credit utilization, the percentage of how much you were using compared to the limit.
Well, that's what they did, because my balance is real low, but
Yep.
they showed the highest balance over the last year.
Right.
It made it look like I was almost tapped out.
Right. I would check on that if I were you, and just make sure that they're reporting what your actual balance is. And one call to TransUnion generally will answer that. But how much of your total credit available on credit cards, as I mentioned before, how close you are to maxing out your available credit is really the concern there. And for some people, you may have a really high score and be close to being maxed out, but you've made great on-time payments the whole time, and you've had that account for such a long time that it really doesn't affect your score that much until you go over the credit limit. And then at that point, it will probably ding your score because it's showing that you're using more than what's available.
I have a question.
Yes,
Do you
please.
like questions at the end, the middle?
Oh, whatever.
Is it better to have a credit card with a high limit or a low limit? Because like I had $5,000 on my credit card and I was making one big purchase.
Yep.
So I asked them to increase it.
Yep.
So I go, and I actually had from the credit card guy say, "You're doing really good with this. I'm like
Yeah.
proud of you." Anyway, and so they raised it up.
Yep.
But now that I've paid that all off and whatever, should I have them put it back down again?
I
where it
wouldn't.
was? Just leave it.
Yep. I wouldn't worry about it because, again, if they raised it to 20,000 as an example, for you to get to 50%, you'd have to charge $10,000 on that card. So actually, for your score, it's probably beneficial to have a higher limit, so long as you're not, prone to going and doing
Buying
wild
shoes?
spending sprees. Oh. Yeah, $20,000 worth of shoes, that would be a problem. So,
No.
depends on for who, right? How much of the original balance borrowed you still owe on installment loans comes into account, like your vehicle. So if you borrowed $10,000 on a vehicle and you've made X number of payments and now your balance is $7,200, that is taken into account in terms of what your score would be based on how quickly you're paying that down. Length of credit history. As long as you don't have negative information in your file, the longer you've had credit, on average, the higher your score. So it's why I owned a mortgage company for 4 years, and it's why when we saw people come in that had credit for 30 or 40 years, they typically had 700 or higher credit scores. And just in case you don't know, it's the range is from about 350 to 820, depending on the credit bureau. To get to 820, I think you would have to have pleased the gods in some way, because I've never seen a score that high before. I've seen about 802, 805. Generally speaking, anything over 720 will get you approved for the highest possible or the lowest possible interest rate on anything, the best approval you can get. So we have length of credit history, and last we have new credit. And how many new credit accounts you've opened recently is taken into account, how long it's been since you opened new credit, how many requests you've made for credit. So anyone have an idea when this might come into play?
Checking for a mortgage.
That would be one. Although when you are qualified for a mortgage, if your credit is pulled and it's pulled as a mortgage request, you actually have 30 or 45 days, I don't remember which it is, to re-pull the credit by a number of different lenders. So if you're shopping around different lenders, you're actually not dinged multiple times so long as it's in the same, let's call it a 30-day period. With vehicles, it's a whole nother story. So you pull credit on a car and multiple people do it, they will take into account that you're shopping for a car and all these banks are pulling credit. But you want to make sure that ideally get qualified at the credit union first for an auto loan before you ever go in and negotiate with the dealer, because you'll get a far better deal on the car loan through your credit union than you ever would through the dealership. So what I always encourage people to do in a car buying seminar is, hey, go get qualified first before you ever start looking. Figure out what payments you can afford and where you want to be, and then go to the car dealership, because their favorite question, who shopped for cars again the last year or two? Aaron, did they ever ask you, well, what do you want your payment to be?
I don't remember.
Okay.
Probably.
Yeah, that's typically one of the questions they ask, because, what do you want your payment to be doesn't take into account the price of the car. It takes into account the length of term of the loan, the interest rate. They can doctor all those things. So if you said, well, I want to get my payment down to $85, they'd say, well, that's great. We have a 13-year loan that would be perfect for you. So just be careful on that. The other time that this becomes an issue is at Christmas, because my wife loves to get 10% off at Christmas time on everything in every store. So at Christmas time, she'll open a bunch of new accounts, then turn around and close them all down. If you're not doing anything serious with your credit, like refinancing your home or buying a car, it's fine to do, because your score will go right back up after you do that. But know that it takes a temporary dip, because it looks like you're asking for all this new credit right off the bat.
How long does that last?
Usually about 3 or 4 cycles, 120 days, 150 days. The thing about credit scores is they dip really quick, but they come up really slow.
So if you have a bunch of credit cards and you don't need all those credit cards, you should get rid of them?
2 years ago, I would have said yes, because at one point, part of the algorithm was how many cards do you have. Anything over 3 was actually detrimental to your score. And they've since taken that out. They've taken that out of all the calculations. So you could have 25 cards and 22 of them you never touch, and it's not really affecting your score much at all. So especially if you've had them for a good long time, I would leave them open. I wouldn't worry about that.
If you close them, doesn't that affect your credit?
It does affect your credit, yeah. If you close, especially a good long-standing credit account, if you were to close that, those 8 years or 10 years or however long you've had it actually now drop off your credit report, and your score probably would go down.
So you should keep the longer one and drop the shorter one.
You got it. Yep.
So what's the advantage of your wife doing that? If she closes it, because then next year she goes shopping again and gets the 10% off again?
Yep. Yep, pretty much.
You can get 30%.
She's the coupon queen. That's why.
Okay.
She's the coupon queen. Yeah. She grew up in a house where her mom didn't buy stuff unless it was on sale and she had a coupon. So, she does everything she can. In fact, I'm tempted to start a blog with all of her stories, because daily she'll tell me how much money she saved on something or another. She knows that on Wednesdays and Sundays you can get gas at Hy-Vee and save 10 cents per gallon off. So she's always going on these days. And so the website is called 365daystosave.com, which I'm working on right now, because I really think people would be interested in seeing how maniacal my wife is about saving money. And I love her for it, don't get me wrong. I totally love her for it.
Oh, I have a question.
Please.
If talking about a pre-approval with a credit union
Yep.
when shopping, say for an automobile, if you go there and you have the pre-approval and you come right up front and say, this is where I'm going to finance it,
Yep.
then do they look around? Do they check your credit report
Mm-mm.
for, okay.
Not if you don't. If you come in and say, hey, I've got financing already established.
Mhm.
In fact, I'm just going to write a check, because I'm guessing generally what happens, at least at my credit union, that the money is put in the account for a car loan. No, not the case.
We have to punch a check.
Cut a check, okay. But that way you could negotiate the price of the car, call in to get the check amount, go grab the check and take it to the dealership. And at that point, the dealership doesn't even pull credit. They don't even worry about it.
Because then it doesn't ding a little more.
Right.
It's a little less.
Exactly. Yep. So how to improve your credit score? Number one, just pay your bills on time. There are a couple of services out there, and obviously if you're on bill pay and you have like an automatic bill pay set up, that's probably the ideal way to make sure they're all on time. There is a service called mint.com, M-I-N-T, and through mint.com you can actually set up alerts that will text message you or email you when certain bills are due. It could text message you when checks clear, when there's a number of different things that it will do, but this is one of the ways that we use it is to make sure that all of our bills are paid on time. We get alerts on it for the most part. One of the things in our, yes?
Which our bill pay also does at the credit, by the way.
It does?
Yes.
It has text alerts and things like that?
Email alerts.
Fantastic.
So if you got that to your phone, then it does the same thing.
That's awesome. Forget I ever said mint.com. Because Capital View does it all, which is awesome. Well, our goal in our massive payoff run was we wanted to write 1, maybe 2 checks a month. Because just the very process of sitting down and writing checks is laborious, isn't it? It's just like, I gotta write checks. Just kind of a drag. So we want to make sure we wrote as few checks as possible. The way we do that is through bill pay and making sure they're all on time. Number 2, don't open accounts that you don't intend to use on a regular basis. So this goes back to the 10% off accounts. As much as I try and encourage her not to do it, she's going to do it. So, but for most of you, if you're not going to use it, don't bother opening it unless you're saving a significant amount and it's worth it to you. Keep your balance low in relation to your available credit. So there are 3 different levels where you're dinged more drastically than others. The first is 30%. So again, it would be like a $300 balance on a $1,000 limit card. 50% would be $500. 80% would be $800 on a $1,000 limit card. And again, the reason they're looking at that so stringently is how close are you to going over is a suggestion of how well you use credit. How comfortable you are using credit. 4, and this is a big one. If you've not ordered a copy of your credit report, you'll want to make sure you do that. And there's one key. There's actually 2 ways that you could do it. Number 1 is if you go to annualcreditreport.com. Annualcreditreport.com allows you to order 1 credit report per bureau per year for free. What you don't get is your score. The score is going to cost you $5 to get. But this is literally the only way to go out and pull your bureau for free online. It's annualcreditreport.com. And the reason that I encourage people to do this is there's probably something that's sitting out there and it may be 3 or 4 years old that you don't even realize, and it's actually artificially depressing your score a little bit. So there was a case where a guy had come in, he was probably in his late 20s, early 30s, and he was wanting to refinance a house. And he said, I've tried to do this a number of times, but the rate they keep giving me is just sky high. And I said, well, let's pull your score and look at it. And I said, based on your payment history and just you being honest with me about what you've paid and been late on, where do you think your score should be? And he said, I haven't been late on anything in probably 4 or 5 years. Back in my college days and right after school, I got into a little bit of trouble, but I think I got all those things resolved and now it's behind me. Well, as I dug into his credit report, I said, there's something on here from, it was Old Navy or Banana Republic or Abercrombie and Fitch or one of those companies. And it was a credit card that he had gotten to buy clothing. And I said, it looks like you have a balance on this card of $620. And he said, that's impossible. I haven't had that card in 5 years, I bet. And so we dug into it a little bit more. And he said, you know what I remember? I remember calling on that because I had gotten behind on it and it went into collections and I called them and we settled on it. And I paid them, and he goes back through his records, he said, I paid them $200 and that resolved the account. They basically accepted it for payment in full, although it was less than what was owed. And they were supposed to wipe off the entire balance. Well, when I called the credit card servicing company, and I said, I'm looking at this guy's account, here's the number. The woman looked it up. She said, what does the balance show on the credit report? And I said, it's $620. And she said, this was supposed to have been zeroed out 5 years ago. But someone left $15 on the card instead of completely zeroing it out. And that had grown through fees and interest and penalties and all that to $620, causing his score to be low because he was showing a rolling 90-day late on the card because he hadn't been making payments on it. So with one phone call We got that entire account expunged off of his credit report, and within 60 days, his score had gone up 60 to 80 points, getting him prepared for a better interest rate, lower insurance rates, and so on and so forth. So the key is order a copy of your